All right. What's up, Tycoon? Super excited for today's video. We're going to be taking a look at Exicure, ticker symbol XCUR. And this one was a viewer request for an update on this stock. So that's why I'm doing that. I do viewer requests every single week. So be sure to let me know down below in the comment section if you have any requests, and I'll be able to chart it up for you, whether it's a stock, cryptocurrency, or whether you guys want a strategy or a tutorial, a little bit of a walkthrough. I can help you out with that guy as well. Okay. So we're going to go ahead and dive in. And actually, before we look at the chart, okay, because we're looking at the daily chart right now, I want to show you guys something. All right. So they got a notice of, that they may be delisted. Okay. And we're looking at right here at the official rules. So in accordance with the NASDAQ listing rule, all right, the company has been provided an initial period of 180 calendar days or until June 28th, 2022. All right. For the bid price of the company's common stock to close at $1 or more for a minimum of 10 consecutive business days. All right. So that's where we're at. This stock will literally be taken off of the stock market if or delisted, okay, from the NASDAQ. If it doesn't close above $1 or more for 10 consecutive business days. Now, what this means is 2 weeks in a row in the stock market, okay, with no holidays, right? So we're looking at the price right now. It's at 21 cents. So this thing would have to go up, about 500%, up to $1 here. Yeah, like 400%, for it to stay listed in the stock market. All right. Now the market cap's pretty low because of, the price that it's at. So, it is possible for it to come back up, but that's what you're battling against right now. That's why you're seeing this pattern here known as box consolidation. Okay. Now, this is where a stock just kind of stagnates and consolidates, and the market is basically in an agreement of the price in these levels. All right. That's what box consolidation is. If we zoom out, all right, let's go to like the weekly chart, for instance, right? And we can look in here. This stock has not been performing very well. Okay. It's definitely in a downtrend, going down, and it's been making lower highs and lower highs and lower highs and lower lows and lower lows and lower lows. All right, so it's definitely not in an uptrend. But there are some nice things on the chart for technical analysis wise, right? And I'll go ahead and show you those and zoom into them. Basically, kind of covered that it was being delisted, or the delisting notice, in my last video. But people still want to hear more about the stock, so that's why I'm making this one. Technical analysis wise, we have these two gaps up here. These are gaps on the daily chart. These are areas in the stock market in general, in the stock market as a whole, that 90 to 95% of the time fill. Okay, it's just a matter of when, not a matter of if. Right now, there is that 5 to 10% that never fill, and this is why this could be a case. Right, we may never fill the gap up to $1 if this thing gets delisted. Right. But there is a very big gap up to $1, and then there's an even smaller gap up to about 65 cents. All right. So, where we're at right now, it's offering some really great returns, if it was to come back up and fill these gaps, if you held the shares, 200% just to the 65% gap. And then, if we fill the whole gap up here, all right, then that's going to be almost 400%. But you may have to hold on to this for years. Now, we know that there's not that much time period left for this stock, and we know that there's a deadline of June 28th, 2022. That's not that far away. Summer is right around the corner, so there's a high possibility that this stock could be delisted. Right. What we have, if you look at these two ovals, okay, the next thing that we'll cover is these ovals. Here we have a low, here we have a lower low. If we look at our RSI, we have a low here, okay, at the same point on the oval, and we have a low here, but this one is a much higher low. This is what's known as bullish divergence, okay? So it's been setting up, consolidating, and the RSI has been gathering strength and growing and making higher lows. It is possible that we could see a bullish pop or some bullish activity in the future on Exicure, right? So possibly there is some good day trading, swing trading opportunities, but when it comes to long-term investing, you have to keep in mind that there is the potential that this stock will be delisted in just a few months. So is that something that you really want to make a long-term investment in, right? Now, if you're trading, you can kind of look to, buy towards the bottom of this, box consolidation, this gray box right here. All right, so we'll zoom in a little bit more on that so you guys can see it a little bit clearer. And right up the highs of it is going to be around 33 cents, 34 cents, and then the lows of it are going to be right around 13, 14 cents, and you could have a stop loss there at 12 cents, right? So if you get in at 13 or 14 cents, you'll be risking 1 or 2 cents, and then trying to avert, that'll be your risk, right? And if you get below those levels, you can exit the trade, and you can try to ride the momentum up to 20 cents, right? It's a good take profit. You can ride it up to 26 cents, 30 cents, or the top of this consolidation zone would be 33, 34 cents, right? So those are nice little swing trade or day trade possibilities. And if we do get a major breakout off of that bullish divergence that I showed you guys, and let's say we have a really strong pop and that carries us up to the gap fill. We do have that gap up to from 61 cents to about 65 cents to fill. So that could be one last rally. We could see the gap fill come up to here, in hopes to try of maybe some investors trying to step in and get it back to $1 and keep it above $1. And there is always the possibility that they do this gap does fill before their deadline, and they are able to maintain it above $1 for 10 consecutive business days, right? So that's basically my analysis on it. I'm personally not going to be messing with this one. There's much better things you can trade. You can trade the S&P 500. You can day trade option contracts on that, and you can get anywhere from 50 to 100% every day. No matter what day of the week it is, whether it's a green day or a red day, whether the market's going up, whether it's going down. There's always a way to make some profit in the market. And if you guys want to see my strategy on how I do that, then go ahead and watch this video right here.